I am really pleased to be able to have another great conversation with an expert in this area. I'm pleased to welcome Amit Bouri, CEO and co-founder of the Global Impact Investing Network. And I get to talk to Amit about whether impact investments are ready for pension funds. It's a big question, and one that I think we're going to get a little color on now. Welcome, Amit. Nice to see you.
Nice to see you
Hello.
too. Thank you so much for having me.
Yeah, so Amit and I are going to have a Q&A. We're going to talk a bit, and we're going to take your questions at the end. So as you gather your questions, as they come up, please enter them in Discord, and we'll make sure I answer those throughout the session or Amit answers them throughout the session. So look, Amit, I don't know how familiar all of my audiences with your organization. So I'd love to get your view on your description of how you co-founded it, how you came to co-found the Global Impact Investing Network, and what role it plays now, and like, who do you work with? Who are your members?
Sure. No, thank you so much. And I'm really honored to be here. And I'm also very honored to follow Carol Ann. I thought her comments were incredibly fascinating. And it really pushed my thinking on a number of issues. And so thank you to her. And if we could applaud her, I certainly would be joining the applause. So I'll give a brief background on why the GIN was set up and who we are and what we do. So we were originally founded in 2009. And it was out of a recognition amongst the small community investors who are interested in putting their capital to work to have a positive impact on local and global issues. And there was a lot of activity already underway in areas like affordable housing in North America, sustainable farming all around the world, things like microfinance in emerging markets. And there was enough activity where people could see the potential for trying to think about impact across an entire portfolio. So we were founded with the mandate of building a new market, like a new industry, if you will, focused on investors who are interested in putting their money to work to have a positive, measurable social or environmental impact alongside a financial return. Fast forward to today, the GIN has over 30,000 people on our network all around the world. We have 50 formal members, we have over 300 formal members in 50 countries. Those members are a broad range of investors, everything from large institutional investors like pension funds and insurance companies, huge global financial institutions like big banks, as well as large asset managers, development finance institutions, philanthropic foundations making impact investments with their endowment, and also boutique fund managers who are very specialized but in putting capital to work in any number of issues. We see impact investing happening on 6 continents, and we also, the GIN, do a lot of work to help make sure that there's deep integrity to impact for all that capital that's being deployed in the market. So we do a lot of work on impact measurement and management, and we also do a lot of research on the trends and activities and best practices in impact investing. So take this all together. We are part of a growing movement of investors all around the world, in places like Canada and the US, Europe, Asia, Latin America, and sub-Saharan Africa, who are increasingly moving their capital to have a positive impact on huge issues like climate change, as well as addressing poverty and any range of social and environmental issues that the world is facing today.
Work with asset owners. They're a big part of what you do. What kind of conversations are you having with asset owners and pension funds specifically?
Well, I think we are seeing a huge growth in interest from asset owners in general, and including pension funds. As I'm sure your audience knows, that there's an increasing recognition about the importance of ESG integration into the portfolios of asset owners. And that's been a trend that's been underway for some time, but I feel like in the last couple of years, it has really taken hold. A lot of that growth has been motivated by a sense of how do we think about ESG factors to mitigate risk. And of course, I know that's on the topic for this conference, and that's something that has really helped to make ESG more widespread. Now, the trend that we're seeing that started about 2 or 3 years ago, and it's only building, at this moment, is many of the asset owners who have been interested in mitigating risk are also now thinking about how they can deploy capital to have a positive impact. So not just how to manage risk down, but how to have a direct positive impact on things like mitigating climate change or increasing an inclusive economic development in their own regions or around the world. One thing that's important to note is we can't lose sight of the moment we're in the world, of course, and that is with the coronavirus pandemic and the financial and economic implications of this crisis. That has actually accelerated interest in impact investing, because I think more CEOs and CIOs of asset owners are recognizing that there's a role to play in putting impact at the center of their activities to help bring their economies back to full recovery. And I think that presents an exciting opportunity to rethink the way we think about the role of our capital, so they can work across success across multiple dimensions. So not just achieving financial objectives for the pensioners themselves or for the other stakeholders, but also how do we achieve a strong impact on any variety of stakeholders, including local communities, national economies, and even the planet and the global economy. And I think that pivot and shift in thinking is driving a lot of interest in impact investing right now.
Yeah, absolutely. So data can be a big challenge, even in ESG investing, and we've had some conversations around that. But for impact investing, I would imagine that's a problem as well. How do you measure performance? Is the data reliable?
So it's this is a huge issue for us, and I mentioned at the opening how the integrity of impact is a real focus for the GIN and our community as we grow this market. What I've seen is mainstream investors, so asset owners and asset managers, are incredibly interested in impact measurement and the data about how we understand impact performance. For the GIN, we have actually been helping to address this need through a system that we launched last year called Iris Plus. That's IRIS with a plus sign. It's free, it's online, it's very accessible, and it builds on over a decade of experience that we have in the realm of impact measurement and management. The goal of Iris Plus is so investors, large and small, can start with a thematic area, let's say clean energy access, or something along the lines of gender equity, and identify the specific strategies that they can use as investors to address those goals. And then it connects them to the core metric sets that they can use to track and manage performance at a company and portfolio level. So Iris Plus helps investors translate their impact intentions into real impact results. We've worked with over 50 different standard setters to help develop the metrics and the system of Iris Plus. And it also is built around the SDG framework. So for pensions and other asset owners to focus on the sustainable development goals, Iris Plus can help them translate those huge, important global goals down to an operational level. Now, once people are tracking the same metrics, that sets the stage for us to do impact performance analysis and comparison and benchmarking. And we're actually just in a few weeks' time going to be launching some new research that we've been conducting on how we can develop a methodology that we've developed around impact performance comparison that I think will be of great interest to investors who want that data at their fingertips so they can best understand the dimensions of impact performance alongside elements of financial performance.
That's excellent. And has that been widely adopted and used? Like how are people responding to it?
So for Iris Plus, it's been out in the market about 16 months, I think, and we have over 11,000 users around the world from 7,000 independent organizations. And so it's been a really strong uptick in growth, and that only continues on a quarterly basis. We're seeing a lot of adoption on a global basis. We believe the figure is around 70% of the world's largest asset owners and asset managers have people who are using RS Plus on their teams. So it's early days, but incredibly promising. The impact performance methodology I mentioned is actually quite new. We launched a pilot study this time last year, which I think was quite path-breaking. And the research we'll be coming out with in a few weeks' time really moves the market ahead in a big way. And that we'll be looking at a much more robust kind of methodology for how we think about impact performance compared to other investors, as well as compared to the magnitude of the issue itself. So how does an investment performance look in comparison to the need for, let's say, affordable housing or financial inclusion or sustainable agriculture? That is quite new. And so it's very early days, but it's kind of the R&D function that the GIN has in helping to propel the market's thinking forward.
Excellent. So just a reminder to everybody that is watching our session today, don't forget to send your questions in so that you can get your response from Amit. So Amit, one of the things that has come up again and again, no big surprise, is COVID-19. So you mentioned it earlier, but has it changed your thinking or the thinking of some of your members or the people you speak to around impact investing and the work you do? And if so, how?
Yeah, I think it's had a profound impact on the impact investing market, and we're still, just at the beginning, the stages of understanding how it'll affect impact investing. But one of the things that people often talk about with the COVID crisis is how it accelerates trends that were already underway. For example, the shift to working from home. Obviously, it's been incredibly abrupt, but it has really accelerated that shift, and we think that'll have lasting impacts on the way people work. For impact investing, the same is true. If we had this conversation a year ago, I would have told you interest in impact investing is just booming all around the world, whether it's Australia, Asia, Canada, the US, or all across Europe. We see a very consistent global trend from asset owners, large and small, who want more of their capital to be in impact investments. They want to be part of this, part of the solution to the problems that they're seeing around the world. Now that has only accelerated with the COVID crisis. I think when the pandemic first set in, there was a pause. I think as everyone took stock of what was happening in the world and recalibrated their strategies and approaches. But in the last few months, we've seen a huge increase in interest in impact investing. And I think there's a few reasons for that. We refer to it as one crisis, but I think it is actually several crises that are contained within what's happening due to the pandemic. First and foremost, of course, there's a public health crisis that has spurred a financial and economic crisis, which has also, in some parts of the world, influenced a racial justice crisis. And then we have seen a compounding effect, of course, on the climate crisis in a very visceral way in many parts of the world. And then the last element that I'd highlight is a confidence in trust a crisis in trust and confidence in the system itself. These are huge systemic issues, and I think that has really gotten a lot of investors to think about the role that they play in addressing these multiple crises. And the pandemic has really highlighted in a very challenging way many of the inequities that exist in society predating COVID. So we're seeing them differently. We're seeing the issue of how many people were working but were not secure. They had an incredible level of fragility and vulnerability despite working very hard to support themselves and their families. And I think that is shifting societal values as well. And I think increasingly, investors are thinking about how we can have a positive impact to address any number of the issues spurred by this pandemic. That kind of macro impact of the pandemic is matched with what we've seen in the evolution of impact investing itself, where the market is much more mature than it was in 2009 when the GIN was launched. We have more data, we have more track record, we have many more credible institutions who have deployed capital in impact investment and have increased their allocations over time. And so we've seen impact investing move up the org chart So it's not just being discussed in the responsible investing or sustainable investing teams, but it's actually now at the CIO level, which I think is a leading indicator of a lot more impact investing activity from the world's largest asset owners and asset managers.
So, talking to Carol Ann, she's got some very specific numbers where she'd like to see the indigenous economy grow. So, from the TD study that sort of was either 16 billion, maybe 32 billion, to an ultimate target of like 100 billion, right? And then kind of scaling up to it. From where you sit in the impact investing space, and I know it's very broad, but do you work with these kinds of numbers too in terms of what level of investment you need to see to move the dial on some of these issues? And if so, what does that look like?
But we've done a lot of analysis on the size and scope of the impact investing market as it exists today. And our latest research, which comes in the largest data set on the impact investing market, our annual impact investor survey, came out just recently and estimated the global market size at $715 billion US. And so that is a sense of the scope of the market today. We have not set targets around how big we want the capital to be in terms of for any specific sector, whether it's the indigenous economy or if it's by issue area. But what we have set our sights on is a vision of how we want to see impact investing incorporated into the broader financial markets. And our vision is that impact becomes part of all investing. Where all investors consider the impact of their investments alongside the financial risk, return, and time horizon of their portfolios. So this is just built into the system. And I learned a lot from Carol Ann's remarks, and I want to learn more about the work that she does. But I think that if we achieve the vision that the GIN has, that would mean that investors and economic actors broadly would be thinking about the impact that their investments have on marginalized communities, whether they be indigenous communities, ethnic minorities, lower income populations, or other groups that are left out of the benefits of the broader economic progress we've seen. And it would also mean that we are moving the needle on huge systemic issues like climate change and inequality in a way that really contributes to a more sustainable, more inclusive, and more just world.
So I'd like to follow up on that. I've got a question from Julie Case. Thanks, Julie. Pension plans have started to embrace ESG and sustainable investment from a risk perspective, but at the end of the day, as Julie points out, they're still targeting market and returns, right? So are there impact products out there that aim for market returns in addition to the impact? It's a really, really important question, I think.
Yeah, no, and I appreciate the question, Julie, and I think it's absolutely important because this comes up all the time, as you can imagine. I think it's a natural thing to react to, is this too good to be true, or is this real investing? The thing I'd say is that there are a range of impact investment opportunities that are financially viable. Not all of them will produce a market rate of return. And that's the role where we see a lot of activity from philanthropic foundations, high net worth individuals who have a lot of discretion, and other actors. But the vast majority of the impact investing market, over 2/3 of the impact investors that we survey are seeking risk-adjusted rates of return. And that may mean they can't invest in every impact investment opportunity, but it does mean that there are plenty of things that they can invest in that will have both a positive impact and allow them to achieve their financial objectives. Our data points to over 90% of impact investors are meeting or exceeding their financial objectives. And that's been quite consistent in the 10 years that we've been conducting our global survey. And so I think what's important to note is that, well, in addition to the market data, the thing I'd say is the most promising indicator is many of the larger institutions that have fiduciary obligations that have been active as impact investors. So firms like TIAA Nuveen, Prudential Financial, AXA Investments, Zurich Insurance, and many others, over time have increased their allocations to impact investments, which I think is the strongest indicator, a behavioral indicator that they are seeing the financial returns that they need to meet their obligations, and see growing opportunity for them to deploy capital into impact investments. Thank you for the question. I really appreciate it.
Yeah, and we have time for more, so keep them coming. I have another question for you. So yesterday we had a terrific discussion on organizational resiliency, both how to build, a strategic framework that has the capacity to deal with shocks and change, but in addition to approach assets and portfolio construction in a resilient way. Do you see impact investing playing a role in this concept of resiliency, particularly for portfolio managers, for CIOs that are obviously, I mean, the theme of this conference is the challenge of change. We're dealing with such a disruptive environment. Is integrating impact investing helpful in this regard?
Yeah, I really appreciate the question, and this is something that we've been thinking a lot about as well. And in fact, our framework for how we think about impact investing's role in the response to the coronavirus pandemic is in three phases, actually. It's the upfront response of how investments can play a role in directly addressing some of the needs surfaced by the crisis as it's happening. The next phase is the recovery. And I think an impact-led recovery is going to be absolutely critical to building back in a stronger way, building back greener and more inclusive and more supportive of a more equitable society. But in addition to the response and the recovery, it's also important to think about how we build a more resilient economy and society. We will have many more shocks, unfortunately, but hopefully not as severe as this pandemic has been. And it's important for every financially driven investor to have a resilient society and a resilient planet. And that also means, speaks to how they're thinking about the resilience in their portfolios. Many investors have actually thought about impact investing as not only strengthening the resilience and social fabric of communities and economies where they invest. So more stable economies mean that you'll have less financial volatility for long-term investors like pension funds. But we also see a lot of investors thinking about how impact investing can actually add resilience to their portfolios in a more direct way. So many investors have been interested in impact investing because of diversification and some counter-cyclical behavior that some have observed by building more robust impact investment portfolios. So these are all issues that I think connect to impact investing, and they explain some of the reasons that we are seeing more and more pension funds and asset owners being engaged in impact investing and seeking us out to think about how they can build impact investing into their investment strategies.
Yeah, no, those are really good points. I think one of the big questions is, what do you want people in this room, virtually, to do when it comes to impact investing, right? Like we've got a lot of assets under management here. We've got asset owners, asset managers. A lot of them aren't in the impact investing space. What's your call to action for them?
Yeah, no, thank you. And I think this is such an important time to be asking this question. If you look around at what's happening in the world, I think what's clear is that we're not, what we have right now is not sustainable. Not just from an environmental standpoint, but also when we think about inequality and what's happened over the past 10 years around inequality, that's only been exacerbated by this pandemic. And so if we want a world that leads to more stable societies, a more sustainable planet, and more sustainable financial returns, it's important that we change the way that we invest. And we're now at a stage in impact investing where we see many of the world's largest institutions, incredibly serious investors, increasing their allocations to impact investments. So if you're not already active in the market, I would encourage you to think about how to do so. You can check out the GIN and at thegin.org. We have a lot of resources that are available. Our research is all free and open. But really, this is the time where if you're thinking about your pensioners and the world that they want to retire in, and not just the retirement savings that they want to have in their account, and the world that they want to leave for future generations. If we can invest in a way that does create a more sustainable and inclusive world. And one thing I'd note is that there's an increasing amount of data on demand from pensioners themselves in places like North America, but also in Australia, the UK, and elsewhere. That's leading to and really pointing towards this demand that people want their money to be invested sustainably for impact and for a better future. And I think as pension fund managers are thinking about how to respond to their constituents, impact investing is a great way to think about how you can not only think about environmental and social factors to manage risk and reduce harm, but how you can put your money to work to be part of this solution, to have a positive impact on moving the needle on issues like climate change and inequality, to contribute to a better world and a much more sustainable and stable global economy.
That's wonderful. Amit, I thank you so much for taking the time to be here with us today. You've given us a lot to think about and a lot to pick up on in our next discussion. I thank you very much.
Thank you for having me. I really appreciate it.
Yeah, next time in person.
Yeah.